Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, and here we are now on April 19th, 2023, 5:55 p.m. Central Time. So we're still in earnings season. You're getting a couple of companies get themselves into trouble. Markets drop on them. We saw that happen yesterday in Netflix, CDW today, Tesla today. But then we get some of the banks coming out, and they're good. And we're going to get more mid-tier banks coming out this week as well. So I want to see what they did. But as you saw, Western Alliance, they had deposits come in. The market wasn't ready for that. Overall, I would still rate the earnings season, as young as it is, so far a beat, not a miss. But the stock market's sort of not going anywhere. And each day that goes by, tomorrow will be on the 20th, for example, you're closer to that Fed decision day, which is, as of that, right now, I think it's 2 weeks away. So we'll see what happens. I think it's baked in that the Fed's going a quarter-point hike. Everybody will listen to what Fed Chair Powell says, the naysayers, as I call them, the people that keep buying these breaks, saying, we are so close to the Fed pivoting down, you don't know it, and I don't agree with that. First off, I don't see the Fed pivoting this year. I think they would wait a couple of quarters. You heard what I said, quarters, to be certain that when they do stop the hikes, that the core inflation falls. I'm not worried about the headline inflation. One of their favorite indicators is core. If you can't get the core down, what do you think you're going to do with the headline? That's an easy one. That's the low-hanging fruit. But you got to keep your eye on that core where the stickiness is. I don't know if you paid attention to what went on in the UK, but their core inflation didn't budge. So they're getting their small drops on their headline down to over 10% still, but we're not there, thank gosh. By the way, if you go out for food and drink, it's 40% higher than a year ago. Can you imagine? I guess the restaurant bills are pretty expensive. But what does that do? Well, it puts pressure on the gold. The gold market's now flirting with the 2,000 level. You're not hearing the talk of traders every morning. Is this going to be new all-time highs? Are we there? You're not getting that. In the silver market, you're flirting with the $25 range. We'll see that in a minute. In the dollar, I thought the dollar was ready today to turn itself into the downtrend, and it got up over yesterday's highs by 1.5 points and then gave all that up, by the way. It acts to me like a market that is tiring on this rally. So if we could together, let's take a look at gold and see how it looks. And this is a weekly area chart of just closing prices. You haven't given up very much. You're down for the week $7, 1/3 of a percentage point. But the chart's not so pretty when you come to the daily chart, the open, high, low, close bar chart. You got the higher highs, the lower lows, and you see that until today's action. Now, what do I mean by that? Let's step back, if we could, to last night. You had the higher high, the lower low pattern. Then you had this day where you had the bounce. And if today's just plain a down day, what happens is you're going to get that arrow pointing to the downside, which I can't take it off. It's there right now. But take a look. So now you got the lower highs, lower lows. You've reestablished the downtrend in the market. Where are the moving averages? Tell me where you're fighting, right at that 18-day average of closes. If the market lets go from here, 1909.80, that's pretty far away. I don't know what would make the market go down there. That's the 100-day average. More likely, the Bollinger Band would be the number that the market might gear for, and that comes in at 1969.5. So, in looking back at it, the market went up and challenged the Bollinger Band and kept stopping. Why? Only 5% of the time do you stay above or below a Bollinger Band. That's the first and most important thing to remember. Next, you always look to see what's momentum doing with it. And if momentum's not embedded, the way I teach it, you hit that number, it's like you're in a race car, pedal to the metal, you hit the wall, and blah, 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 blah. It's over. All the inertia is gone. And that's what happens often in these markets. Now, if you get embedded readings or you're trying to embed it, can be a little bit different. You can see you get there and you're trying to embed it, but inevitably you will go back into that band. Is it a wise person that sells the band looking for the break? No, I've tried that in my career. It doesn't work that way. It's one thing when you lose the momentum to look for the market back at the 18-day average or the closest main moving average. It's very different to go short up there. I think it's very bad for your financial health to do so. That's my opinion. But you're in a downtrend. The pros are most likely probing the short side at 210.60, the 18-day average. You don't want to see prices over 2024.60. I think that's a lot to risk in a probe, $1,400, hoping to get back to the 1969.5 zone. The gold-silver ratio had a 2-day bounce, and all of a sudden it's letting loose with silver coming to life. Now, I have been looking for what in the silver. Let's you and I take a walk down to yesterday. This was Tuesday. You lost the embedded reading. It often results in the market making a run, a strong run, for the closest main moving average under the market. It's the 18-day average. Markets, that average was 24.63.5. You got to 24.71.5. That's not hitting it. You made a run for it. That's not hitting it. I wouldn't be surprised if there's more to go on the downside to get to that average before you get back over the high where the arrow is on the very top there. In the copper market, you have a market that's fallen back to the 18-day average. Do you disagree? One move up to the upper Bollinger Band, not with an embedded reading, overbought. Pros had a shot to come out, and they did. And now, where are you? Well, the swing line is down, but the market is staying over the 18-day average. So bias is how I determine by price to the 18-day average. If it's over it, the bias is up. If it's under it, the bias is down. When you have a situation with the swing line, as it is, and you can't close under that 18-day average, bias up, trend down, the two negate each other, and you have nothing. Where the power has been is the platinum and palladium, especially platinum. It's been a run to the upside. It is embedded. Hard breaks in this market I would expect to be bought. I pointed out to you right here where I'm pointing that you had a bullish crossover, and the market certainly went on to make new highs for the move. In the palladium, you're overbought. You hit that brick wall 2 days ago when I said, you go to the first main moving average. You haven't hit this 100-day average in a long period of time. You don't just go through it typically. Can you? Sure. You can do anything. Do you typically? No. Go back and look at your chart work. You'll see. Now, if you can embed, and you're not there at this point, you're just at the point where if we come in here, let's see if I can't get it to work, unfortunately. But if I could get it to work, we'd see that we're not at the point where you're yet embedded. You have at least another 2 days to go to know if it's embedding. In the dollar index, I think the dollar's in trouble. These rallies that come up are getting stymied very often now at the 18-day average of closes. I don't think there's much upside. I'm looking for full-fledged sell signals in the dollar to see if there's any downside to play with, and that's how I'm going to try to go at the market. There'll be starts and stops. That's often how it happens as trends change if I'm right. I may be very wrong. We'll see. But in the morning, like this morning, I think I started recording at 5:10 or something. What I'll do is I'll open up the charts and we start together looking at first the day's fundamentals. We're going to review 40 charts. We're going to look for entry, exit, buy, sell points, what's there to do in the whole spectrum of the market here. We're going to try to come up with a new video Monday through Friday when the markets are open, and on the weekends with the weekend edition where we look at the weekly charts for the bigger picture. But I do intersperse weekly charts on the daily. We're going to look at long-term positions, some swing trades, what can be done, and how to do it. How do you get this? Well, if you're watching me on YouTube, you see a join button in blue. Take a look at that. If you want to do it through our website, you move up to the top here. There's a cursor. Give that a click. You can go to our website. Under the word research, it's all there. I'm Epstein. I'll see you first thing in the morning. Have a good day.